Welcome back to the channel. In yesterday's video, we discussed the leaked crypto executive order from Janet Yellen's department. It has since been signed by Biden. So in this video, we're going to go through the too long didn't read scenarios, what to expect, and what does this mean for cryptocurrencies moving forward. We'll look at the adoption that's coming up and of course, check in with the all important Bitcoin price as we had particular price levels for the market to hold for some short-term bullishness. So do the good things, the right thing down below, like, subscribe, and share it with a friend if you find some value from the content. Let's dive in. As a full-time investor, there are a lot of areas of finance which I cover here on the channel, but some of these areas are also best served in written format. So if you want to check out the free investor newsletter, the link is in the top of the description. Drop your name, email address, and hit subscribe. Once every 2 weeks, give you an update on crypto, stocks, and real estate cycle. It's free to join and you can unsubscribe at any time, just like this YouTube channel. No strings attached, which makes it one of the best investments, in my opinion, that you can get for your investing. Let's kick off the news headlines with all of the good news and adoption that's happening in the crypto space. Bain Capital launches a $560 million crypto fund. They have $155 billion in assets under management. So essentially this is about 1/3% of their total assets under management, which they'll look to invest into DeFi and Web3. Who the hell are Bain? I hadn't heard of them before. These guys have previously backed investment rounds for DeFi protocol Compound, CoinDesk parent company, Digital Currency Group. So you should know who they are. They are the parent company to Grayscale, and rewards platform Lolly. They also have co-led BlockFi's, which I'm sure many of you are familiar with. BlockFi's funding round as well. So pretty big in the space of crypto already, not new to the game. The story of 2022 has been development and adoption. I'm seeing that again here with Avalanche committing $290 million in AVAX to attracting gaming, DeFi, and NFT subnets. The adoption continues, this time with Stanford University. So Stanford researchers raised $32 million as they build a privacy-focused blockchain. Interesting and good to see that it's a privacy-focused blockchain. Ethereum transaction fees dropped to 6-month lows. The decrease is likely related to the cooling off of the NFT market. So we've seen that. It's not new at this point, but at least we're seeing those ETH fees come down for the time being. Bitcoin will benefit from the new monetary world order, predicts Credit Suisse. I guess whatever your views are on the new world order, it's possibly going to have to be put aside in case these two are in conflict with the theories. On one hand, the New World Order is bad for individuals. On the other hand, it might save Bitcoin. At least that's what Credit Suisse is talking about here. The Global Investment Bank believes the Russian-Ukraine conflict will lead to a new paradigm for money, and it will likely help Bitcoin. The so-called Bretton Woods 3. So we had the Bretton Woods 1, which was in 1944, the US dollar to be pegged to gold. Then that collapsed in 1970, which led to the Bretton Woods 2. So we were looking at a standard backed by inside money, which was just the US dollar, now leading to a Bretton Woods 3. The so-called Bretton Woods 3 will supposedly usher in another era backed by outside money, Bitcoin or gold, like gold, bullions, or other commodities. So in this scenario, the Credit Suisse is suggesting that a Bretton Woods 3 or a new monetary world order will actually help Bitcoin. We're quite possibly on that path to digital currencies now being backed by something other than a government promise. Bank of Israel explores impact of digital shekel on the banking system, and their digital shekel will be called Shaked. And so if you think this is just a one-off or we're not doing anything about it, there are a lot of countries. There are a total of 100 countries exploring CBDCs at one level or another. Some researching, some testing, and a few already distributing CBDCs to the public. So does that mean that all of these countries have to move towards backing their central bank digital currencies to one digital commodity? Not at all. But possibly some of the more legitimate CBDCs may back against a digital commodity like Bitcoin. I think that's what the article with Credit Suisse was leaning towards. Now for the crypto executive order signed in by Biden in the last 24 hours. Here is the too long didn't read of that. There are 6 categories that we are looking at here, and thanks to Jack Nywald on Twitter for a great thread here. So the 6 categories: protect consumer, investors, and businesses. 2, protect US and global financial stability. Address illicit finance. 4, reinforce US financial leadership. 5, access to safe and affordable financial services. And 6, support technological advances. The order independently taps the Fed to do the research into a CBDC as well. The framework to handle these matters is due in 180 days, with a final report due in a year. So it doesn't mean anything in the short term. I guess the positive to the report being signed, or the executive order being signed, is that we're seeing some sort of positivity within the cryptocurrency space for now, and potentially is short-lived because we have 180 days before the matters are due, and then a final report due in a year. With the first 90 days, the executive report requires action and forward movement on illicit finance. So one of those 6 categories needs action within the first 90 days. So to the big question on Bitcoin price, and what does this all mean to cryptocurrencies right now? Well, the first thing that we were looking at yesterday was that we needed a close above 41,300. We got that. The market so far holding up relatively well, sitting at 41,900. And the next stage was to close above the high of the 4th of March, which was at 42,500. We didn't get a close above that. We can move towards that. We can build and move to consolidating above that price. Now, I've got this bar in particular because this is a change of behavior, as Wyckoff has pointed out. The market has basically crashed down from the top, broke the 50% level. And so the behavior of the market, which was seen in the previous 3 to 4 days, was up. The change of behavior occurred and the market then crashed. So that's what we need to get above that day there. The positive to this is the market did touch above that bar. So we did manage to retreat, or we managed to rally above all of the losses that were on that day. So the top of that bar was 42,525. Yesterday, we got 42,598. And so I think we're on our way to test that high again, consolidate, and then move towards the next figure, which is around 44,500. So the short-term outlook for Bitcoin, there are a lot of positive signs at the moment. In order to get back to the next levels, 42.5, 44.5, and then tackle 46. There's always going to be a lot of resistance as we go back up, because we've had so much time going down and a lot of support levels have broken on the way down. So basically, we're consolidating to build a case in order to break back above all of those resistance levels on the way up. And in the short term, it's looking reasonably good. How does the total cryptocurrency market cap fare? Well, it's also closed above 1.79 trillion. That was the goal, the short-term goal, so that we can then tackle the next bar, the 4th of March, which is the same as what we're looking at for Bitcoin. This time it's at 1.85 trillion. So that's the next stage for the total market caps to get above before they can then start to head towards that 2 trillion. If they can't get this in the next few days, it's probably likely we'll get a lower top and then a retest of the 50% and back down. But that's still beyond us, one step at a time. It's not looking too bad. And then if we move across to the total market caps as well, but just looking at altcoins against their Bitcoin value, they're still all in the red within the last 24 hours. Some are turning around in the last hour, but that's not neither here nor there for the last hour. 24 hours, most are red because obviously Bitcoin has gone up, and that has then taken the gains away from a lot of the other cryptocurrencies. Luna is the only one that is holding at this point and broke to new highs against its Bitcoin value. But in terms of its dollar value, it's looking like a short-term double top, but at least it has broken to new all-time highs. It's the only crypto that has got to the new all-time highs in the top 10. We go further down the top 100 list, looking at this column, 24 hours, everything is red against Bitcoin. Remember, Bitcoin has been up, except NEAR. NEAR is looking good with a nice green day as well. And then there's a few others which don't really have too much to say besides Waves, and a little further down, Ruin, which is also in the privacy space. Just taking a quick look at XMR as well, because that also obviously pumped yesterday with the privacy coins. It's down against its BTC value, but it did have a big day yesterday, just like Zcash, which is also down slightly. Overall, the executive order looks like it is good news for the cryptocurrency space, but there is a lot of time between now and when those executive orders and reports need to come back through to the White House. As we saw, the first one's 90 days, then another 180 days, so 6 months from now, and then with the entire report to be completed in 12 months' time. So there's still time in this market to gyrate and churn around at these prices before we see some sort of solid bull market being put together and tackle those highs again. This isn't a bad thing. Plenty of time to dollar cost average in at lower prices, and of course give us time to build a base to then move to higher prices. We need a lot longer at stable prices to then build the base to move higher. Stay in touch with us at the Investor Accelerator. The free newsletter is in the top of the description. Like, subscribe, share it with a friend, and as always, have more fun to get more done.